We are back, guys. That was a great interview with Mark Moss. Definitely could spend a lot more time listening to him talk and questioning some things here and there. I thought that was a very fruitful discussion on Bitcoin and just the United States in general. Next up, we've got FedWatch with Ansel. Very excited to have Ansel with us today. But first, I just wanted to take a moment to say you guys should get your Bitcoin 2022 tickets. If you're looking for work in the Bitcoin space, there's no better place than Miami, Florida, April 6th through 9th. Everyone on the show is going to be there. It's going to be amazing art gallery that you guys can actually be a part of if you check out my Twitter page. There's going to be like art for plebs. There's going to be ways to use Lightning. There's going to be ways to earn Bitcoin through gaming. There's just so many different ways to interact with Bitcoin at this conference that you never even thought of before. So I can't emphasize enough. Get 10% off your tickets, which is the biggest discount out there right now. Promo code YTMAG, and we'd love to see you there and hang out a little bit as well. So go get your tickets to Bitcoin 2022 today. And now, without further ado, here is Ansel Lindner.
What's up, guys? Great conversation with Mark. All right, go ahead.
No, go.
All right, yeah. Let's get on to FedWatch. So my name is Ansel Lindner. This is FedWatch. And if you guys don't know about the show, what we do is we take a deep dive into central bank news, current events, try to find out where Bitcoin can replace or replicate or work into the current system. So that's what we do here on the show. We did just release a new episode that we didn't record live, so you guys might not know about it. It was Fed Watch episode number 80. It was just a friendly Twitter conversation with on inflation and deflation. And Alex Gladstein was on, Joe Carlasari, Jay Gould, Matthew Pines, myself, and a few others. So that was a good conversation. You guys should check that out. But that's all the admin notes up front. So let's get into today's episode. I'm going to go over some ECB stuff with credit spreads, their CPI, press conference that they had last week when they were talking about their policies. And then not much news out of the Fed this week. Everyone's kind of waiting for CPI print to come out. That always comes out on the 10th, where the ECB comes out, a week earlier than that. So lots more to talk about with the ECB. And the kind of boring central bank that we don't really talk too much about is Japan. And so we're going to give a quick update on Japan and then get into some Bitcoin news. There's some in the lending sphere. If we're going to keep this on a credit spread type of show, we can talk about BlockFi. There's maybe a scandal brewing at BlockFi. We don't know, but going to cover some of that news. And maybe we can interact with the chat at the end, take some questions, and maybe talk about the most recent U.S. government seizure of the Bitfinex stuff, if we have time for that at the end. Okay, ECB, their inflation in January hit 5.1%. That's up from 5% in December. And that is another record for the euro era. So since 1999 with the euro, that is another record high inflation mark. Don't forget, we need to take this in context of the energy crisis. So some places in Europe are seeing a 10x increase in their energy costs, and that can trickle down into the rest of the prices in the economy. So 5.1%, even though it is much higher than forecast, they forecasted at 4.4%. So this was a surprise to the upside. In context of the energy crisis and supply shortages, it's not like it's 10%, okay? It's within kind of where we have rationally been in the last few months. So it's not crazy. And the rate of change is declining. So going from 5% just to 5.1%, that's a very small increase month on month. All right, getting into the main news is the press conference from last week, where the president of the ECB, Christine Lagarde, who previously served at the IMF and got in some trouble. She got actually convicted of financial fraud, but they thought, let's just put her as the president of the ECB. We have a little snippet to play. We'll play that at the end of my intro here to this. But I wanted to give my overall impressions of the press conference and compare that with the Fed, because, this is a central bank show. So what I got from what I usually get from the ECB press conferences is that it's much more staged. It's much more highly produced. They're on a modern soundstage with modern podiums. They even have an MC that fields questions from the audience and directs who's going to ask the next question. So it's much more highly produced. And that overall gives me this impression that it's more of a political machine. Their policies actually speak to that too. But so when Christine Lagarde opens up, she makes sure to touch on all the special interest groups. You have climate, you have minority stuff, you have big business, and it's almost as like she's going through a checklist. And so to me, that's a much more political way, much more political process of how to approach policy. Now, comparing that to the Fed, Jerome Powell misspeaks, and a few times when I listen to him, I'm actually like, ooh, that might not have been the best way to say that. You might be upsetting some people, but he doesn't care. He's not out there to, I think, be as much of a showman as Christine Lagarde is. And the Fed is fiercely guarding their political independence. Now, I recently, it hasn't been published yet. I hope it gets published soon for Bitcoin Magazine, a breakdown of Raskin. This is Sarah Bloom Raskin. She's a nominee to be vice chair at the Fed. She recently was in front of the Senate Banking Committee, and the main questions for her were about the independence of the Fed. Is she going to bring her progressive views into the Fed? So the independence of the Fed is fiercely guarded, where it doesn't seem to be that way with the ECB. Anyway, okay, enough of the intro. Let's just play this clip. It is the first Q&A question about inflation. So do we have that queued up?
Oh, I was on. You guys are saying you couldn't hear it?
All right. Well, how about I'll just put it in the show notes, a link to that. It's a 2-minute clip. And I just wanted you guys to get exposure to how she sounds and how the ECB kind of sounds, checking those boxes, those political boxes. But I'll also link to the longer version so you guys can see the whole thing if you are like me and you want to see what the central bank is actually saying. Okay. What else did she say in that longer press conference? Purchases they're going to let purchases run off. So they do QE differently than the Fed, where the Fed would do 120 billion a month open-ended until they changed. Well, the ECB has a set budget and a set time frame, and it just ends when that program runs out unless they extend it. And so she said they're not going to extend it. And so their taper will end March into April timeframe, similar to the Fed. She also would not say that they aren't going to raise rates in 2022. If you rewind the clock to December, she said, "Oh, we will not raise rates in 2022." Well, she's been pressed on that, and she wouldn't say that again. She didn't say they would raise rates, but she wouldn't deny that they were going to raise rates. So that kind of was a surprise to the market, and we've seen some reaction to that specific part where she wouldn't deny raising rates. I will link to multiple stories in the show notes for people, so you guys can read up on it. When I do research on central banks and current events going on in central bank, I get multiple news sources. So I've linked to 2 or 3 different news sources on this exact ECB press conference, so you guys can kind of make up your own minds once you read a couple different news articles about it. But the big story is the credit spreads. So I'm not an expert in credit default swaps and credit spreads like that, but like Greg Foss, who we've had on the show before, but I do have a basic understanding of it. And so let me just explain what's going on. Over the last couple of weeks, certain countries in the Eurozone, their CDS, the credit default swap rates are spiking. So it's signaling that there is some sort of higher sovereign risk for those countries. And these would be the traditional pigs. You have Italy, Spain, Greece. Those are the 3 that I looked at this morning. they have been spiking. Now, when you look at credit default swaps too in Europe, it's interesting because France or Germany will have a different rate than, say, Italy. And you can start comparing these spreads amongst countries. And when they compare these spreads amongst countries, they call this a redenomination risk. There was some scholarship going on back during the first European debt crisis about this redenomination risk. And what they say is that this is like, okay, so you hold Italian bonds and the spreads are increasing and it's getting risky. You need to redenominate out of Italian government bonds into German bunds. Okay, so this is what is the spread in those rates if you redenominate your risk into another ECB country? They've likened this to the chance that a country will actually drop the euro or leave the Eurozone. These are spiking as well for Italy and Greece, once again, Spain. And what I want to point out is that these really started spiking when Bitcoin bottomed. So Bitcoin bottomed and the price has gone up about 35%, right along with this redenomination risk spiking in Europe. So when a large investor or, one of these large financial entities are looking to redenominate the risk into another country, they'll probably be looking to do some of that into Bitcoin. If they have to move 10 billion, redenominate 10 billion, maybe they put $500 million or 1 billion into Bitcoin, gold, those types of plays. So I think this is a very interesting correlation over the last couple of weeks for Bitcoin. And I will be following it very closely in coming weeks. And hopefully I can report that I found something special about Bitcoin and how it interacts with the financial system. So that's all for the ECB. Do you guys have any questions or comments on that stuff, or should I keep rolling? All right, keep rolling. Bank of Japan is the next up. And yeah, like I said in the intro, this is kind of the boring central bank. They have been at 0% growth, roughly 0% inflation, 0% interest rates for 30 years. And so nobody really wants to talk about too much about Japan. But very recently, their 10-year yields have started creeping up. So right now, currently, they're sitting above 0.2%, roughly 21 basis points is what their 10-year yield is at. And this is still within their monetary policy. So what they have done is they've entered into yield curve control. And they said they won't intervene unless the interest rate on the 10-year gets below negative 25 basis points or above positive 25 basis points. That's their window. As long as their 10-year yield is within that, they're not going to intervene or change their monetary policy. Well, this is the highest that it's been towards the upper bound. So a lot of people are talking about, will Japan actually defend it? Will they come in and buy unlimited amounts of JGBs, the Japanese government bonds, to keep rates lower? We don't know, but that is creeping, and it looks like interest rates are spiking in Japan, spiking up to 0.2%. Another thing I have here is a story about inflation. And I was going to share my screen, but I think I'm just going to read this off. It's from the Nikkei Asia, and the headline is Japan and Inflation, What a Corn Snack Says About Rising Prices. Now, I don't know how to pronounce this, but it's umaibo, which are sticks of airy puffed corn that come in a variety of flavors. In April will cost 12 yen a piece before tax, an increase of 2 yen. Umaibo, the name means delicious stick, went on sale in 1979. It's a new phenomenon. Japan's core consumer price index, excluding fresh foods, in 2021 fell by 0.2%. But the Japanese central bank has not been even close to its 2% target since 1992. Umaibo, for example, has been selling for 10 yen for more than 4 decades. So this is a snack treat that's been selling for roughly 10 cents for 4 decades. And this is the first time they're going to be raising prices up to 12 yen. So people are saying, oh my God, maybe Japan has some inflation. Prime Minister Kashida expects unions to win wage increases of more than 3% during this year's annual spring labor offensive negotiations. Despite the prime minister's encouragement, however, this will not be easy to accomplish. According to the Ministry of Health, Labor, Welfare, Japan's wages last year only rose by 1.86%. The country has not achieved a 3% wage increase since 1994. During a news conference on January 18th, Bank of Japan Governor Kuroda stressed that prices are not steadily rising towards 2%. Rather, he said temporary factors such as resources becoming more costly were pushing prices up. So all of that to be said, I've said this before on the show and I'll say it again, is that if you look at balance sheets, central bank balance sheets compared to GDP, Japan is the highest. It's by far the most profligate central bank when you compare it to GDP, yet their inflation is zero for 30 or 40 years and they can't get off zero. Then if you look at the number two most profligate central bank, which would be the ECB, they have 5% inflation. And then the Fed, actually, when you compare the Fed to these other two central banks, the Fed looks tame, yet we have 7% inflation here, or 7% CPI inflation. So I just wanted to point that out, that it's exactly backwards of what you would expect if you're thinking that QE and central bank balance sheets are money printing. So that's all I have for that before I go into Bitcoin. Do you guys have any questions on macro, on Europe, Japan, or any of those types of things?
I have a quick question on Japan. When we see this slowly happening and we know that they are tied very closely to our equities markets, is there any news coming out about what decisions are being made by our Fed and our government that are impacting their decision making?
Most central banks do talk about U.S. policy or Fed policy. So yeah, they consider that. But Japan seems to be in its own bubble, right? They have been at zero for 30 years. And the U.S. has been majorly printing during that, quote unquote printing has been very tight during that time, and it hasn't really affected Japan at all. So in regards to Japan, I would say no. Now, one news item, I did see some lowering of tariffs between the U.S. and Japan, specifically on steel, which is a big issue or a big product. So there is some of those things that could affect Japan more than what the Fed does, is what the tariffs are from the United States. So I didn't look into that very closely, but yeah, there's some of those things that tie our economies together. But the Fed policy, I don't think, is really one of them. All right, let's go into Bitcoin. So one of my things I've been saying about Bitcoin recently is that Bitcoin needs to develop a lending market. It needs to be, have its own credit market and work its way into the legacy credit market somehow, either replicating certain things or replacing certain things to become, to take that next step into being a global player, a global reserve currency. So this kind of fits along in those lines. One of the big players in the Bitcoin lending market is BlockFi, and there has been some trouble recently. I'm going to share my screen for this actually. Let me make sure I'm on the right thing before I share. All right. Hopefully you guys can see that. This is from BlockFi's subreddit. And here's a guy that came out 3 days ago and said, I took out a loan for 300,000 and put 600K worth of Bitcoin as collateral. Market kept going down, so I kept posting collateral as needed to keep the loan healthy. I got an email saying that the loan was being called back because of, quote, indirect exposure to a mixing service, end quote. I appealed the decision because I bought the Bitcoin back in May of 2020 and kept it on my Trezor the entire time. However, since I didn't buy it on an exchange and the person before me mixed it, I get absolutely screwed. So this is a growing concern about BlockFi and Celsius. I think these are two related lending services. They are starting to call back loans due to mixing in the past, taint from the recent past. Who knows how many steps back they go? There's been, in the history of Bitcoin since I've been around, there's been talk about this in the past where they would go back 3 or 4 hops, like Coinbase or others. So we'll see how this develops, but it looks like right now BlockFi is actively chasing people away and screwing people over. When this guy took out a $300,000 loan and he bought a house or he did something with it, and he can't instantly get that back, right? So he's been pretty screwed. Another related story here is the BlockFi has increased their minimum withdrawal. And I thought this was just simply outrageous. So down here at the bottom, Brandon_BlockFi, he's the community manager. He says that they've raised their US based client withdrawal to a minimum of 50,000 US, and foreigner withdrawal minimum to 5,000 US. Now, 50,000 US, that is extremely outrageous, especially considering that their tier 1 accounts go only up to 1/10 of a Bitcoin. So you get 1/10 of a Bitcoin for 4.5% APY. To get to that $50,000 minimum, you're well into the tier 3 here, getting only 0.1% APY. I mean, it is ridiculously low. They're screwing their people over by closing their loans or calling in their loans, and they've dropped their APY and their lending or their interest rates way down. So I think something fishy is happening over there at BlockFi, and I just want to make people aware of it. There are alternatives out there like Ledin, who is a friend of Bitcoin Magazine. I know has been the sponsor of FedWatch in the past. They have better APY, up to half a Bitcoin at 6.25% and over half a Bitcoin at 2.25%. So much better terms there, as well as no, news, no scandal out there for how they've been treating customers. And another alternative is HODL HODL. This is a decentralized exchange where you can lend and borrow. So it's a little bit more risky, but you can find matches for what you are needing to borrow or to lend. So that was it. That is it from me, guys. Opening the floor up to the chat for any questions, comments, concerns.
I want to talk a little bit about, the predatory nature, if you will, of BlockFi's lending program. I'm just going to blatantly say that because from what facts you presented and what was described as far as what's being done, it seems akin to me putting my conspiracy theory hat on, like the notion that healthcare companies and pharmaceutical companies are focused more on treatment rather than cure. And it's almost a similar thing where it's like this lending company is more focused on how do we essentially get the collateral? What is the easiest way for us to collect on all this collateral that we've collateralized against? And prioritize dinging those accounts versus letting the higher API when we have a more steady and stronger income stream almost come in. There's no regulation in place, but what could be done to prevent this type of action in your mind?
What can be done to stop predatory lending is education, basically. Education. Short of government regulation, which should be a very last resort, if any resort at all. You should never invite regulation into any space. But I would just say education, big time. And also a free market, have competition out there like Ledin or HODL HODL. If you promote competition, promote education of what's going on, then I think these problems in the free market will usually take care of themselves relatively quickly. I wanted to add to that story too. I saw that BlockFi was giving away $40 for a sign-up bonus. And I don't know how much you had to deposit, but they were like giving away $40. I'm like, but the minimum withdrawal is 50,000. So who's going to deposit, that money, and where the
$50,000? That doesn't
50,000.
sound right.
Guys,
Yes,
that's less than 1%. That is less than 0.1%. Just context math.
No, but I've used BlockFi. You don't. The minimum withdrawal isn't $50,000.
Well, this was I just got done sharing a screenshot of Brandon underscore BlockFi. He's the community manager at BlockFi. And he said, yeah, that they're raising their withdrawals to US based clients to 50,000 is the minimum.
So that's basically a going out of business proclamation. That's not a sustainable business model. Yeah, man, they started cutting the yields on that fast and early. I suspect Fold is going to do the same. Lolly is already doing the same. Those spins are going to be less and less lucky as we go forward.
Let me tell you, as someone who has spent a lot of time on Lolly and a lot of time on Fold, collecting my free sats, I used to get a minimum of 100 sats on Lolly. I actually did get a few like 5,000 sats. I think I got one that was 10,000 sats. I have not gotten over 100 sats in about 2 months. On Fold, it went from like consistently like a minimum of 25 to 50 to now like I almost always get either 5 or 0. It's programmed that way.
Yeah, they're not giving away free Bitcoin, not a sustainable business model. That being said, we are giving away free Bitcoin on this show. However, we are raking it in with conference tickets, y'all, because you guys keep buying conference tickets. So that's what keeps that train chugging.
We sold a conference ticket on live today.
I don't know. I haven't checked today yet, but we'll figure it out at the end of the show. We can give away some Bitcoin now, though.
Let's throw out some sats.
We give away more sats than you'll get on Lolly or Fold. I'll tell you that. If you're watching on Twitter, get over to the YouTube side of things.
And we have not forgotten about the Twitch fam. We'll make sure to drop a sats code in the Twitch chat as well. But I want to kind of ask you, Ansel, like we're starting to see more lending opportunities come out as far as Bitcoin goes. You see more traditional institutions and new institutions sort of step into this space and give the market an offering that it's been asking for. Where or what do you envision the next iteration of this? We're starting to see it really grow in real estate. Is there a new sector or industry that you would just like to see it pop up in?
I think real estate's a well-matched one. I hope that grows. I think that will grow. I think the higher dollar lending, the more professional financial system is where we're going to see a lot of these things take off because, billionaires can protect themselves better than the average person. And so I think that's going to be most likely where we see more lending activity, and then it will trickle down to the rest of the economy. It's very, very dangerous to, be lending to somebody on some DeFi platform with no reputation and they're halfway across the world, like that's just very, very dangerous. But it's less dangerous for the billionaires to do it because if they're lending to each other, they might even know each other or have other business relationships. So I think that's where we're going to see the first entrance into the space of lending. Oh, and another thing too is, BlockFi, their bread and butter, as far as I understand, was GBTC stuff. Buying the shares at par and then selling them at a premium in the secondary market when they were going to hold it for the lockup period. But now that it's been in a discount for so long, the actual secondary price is below the par value for GBTC. And so that whole business model that BlockFi was built on in the first place is gone. So they've been having to probably pivot on their back end, looking for a place where to find yield to justify these higher APYs that they're giving out. Because they were some ridiculously high things at the beginning. Wasn't it like 40% or 50% when they started?
Yeah, it will be interesting to see as more of these sort of equity offerings in public markets get tied into different companies and how the companies respond, how regulators respond remains to be seen. Alex, I cut you off. Please ask the question you were about to.
No, I'm good. I didn't have a question. I think we've got Altcoin Daily on deck ready to join us here in a second. Do we have any last comments from Ansel?
No, that's it. Just follow me on Twitter at Ansel Lindner. Check out the FedWatch podcast feed. It is separate from the YouTube. So like the episode 80 dropped on our podcast feed. You can find that in all podcast apps. Just search for FedWatch Bitcoin and you'll find us there. Thanks, guys.
Thank you, Ansel.